Hello, and welcome back to another CoinDesk quarterly review webinar. I'm Christine Kim, a research associate at CoinDesk. And joining me again today to host the session is Noelle Acheson, CoinDesk's Managing Director of Research. And we've also got a very special guest for today's discussion on crypto regulation. I'm pleased to welcome Nikhilesh D, Managing Editor of Global Policy and Regulation at CoinDesk. I'm very looking forward to asking Nick all of my burning questions about NFTs in particular. Noelle, how about you? Any hot topics on your mind for this session?
Oh gosh, where to start, Christine, and hi. I'd really like to hear Nick's views on the changes in the leading financial regulators, what the appointment of Gary Gensler as chairman means for the SEC, for instance, as well as what's going on in some of the other financial regulators and what's happening outside of the US, which is such an important arena to watch. And that's just for starters. So thanks, Nick, for being here.
Yeah, happy to be here. Thanks for having me.
And today is pretty special, not just because Nick's here, but also because it is the last episode in our 4-part quarterly review series. Since mid-April, we've been going through a number of topics featured in the CoinDesk quarterly review report for Q1 2021. We've talked about the performance of Bitcoin, Ether, DeFi, NFTs in all of our previous sessions. And so for this final session, we're going to be taking a bird's eye regulatory view on all of these sectors and their development. We'll highlight the significance of certain events that happened this past quarter and most recently in the last few months in April from a regulator's perspective, and also discuss what we might expect to change about the crypto regulatory landscape in Q2 2021 and beyond. So without further ado, I'm going to be sharing the presentation slides now. Noelle, any housekeeping items to mention before we get started?
Yes, 2 of them. 1, send in your questions. You can do that by sending them through the Bizavo chat located in the right-hand side of your screens. Christine and I will be keeping an eye out for on them throughout the webinar, so do please take advantage of it. We really want to know what you're interested in finding out more about, and we really want to make this webinar as useful for you as possible. And 2, very important, everything that we discuss here today should not be taken as investment advice. This webinar is solely for informational purposes. Now, for the first few minutes of this presentation, Nick's going to share with us some of the key regulatory trends and events that happened since the beginning of the year and explain their significance. We let him choose these topics, so we know that they're coming from an expert. So go ahead, Nick.
Thank you. And yeah, it's been a pretty, I feel like a lot's happened every year, but the first, 4 or 5 months of 2021 in particular, feels like a lot has happened. In particular, we're seeing a lot more conversation around central bank digital currencies and, whether or not they'll be implemented in the coming months and years. We're seeing a lot more conversation from traditional financial institutions that are saying, hey, we're kind of comfortable with how this stuff is looking, which, it's interesting from a regulatory perspective because these are companies that, stand to lose a lot or they stand to risk a lot by getting into the space if the regulators they report to aren't comfortable with it. So it's definitely been a very interesting couple of months. I think MasterCard is, one of the good examples of a traditional financial payments firm that is looking at this space, the crypto industry, and saying, we kind of want to get in on this. And the angle with the CBDCs in particular is pretty unique because they're not committing firmly, but the fact that they're having this conversation, they're now saying, if the Fed issues a digital dollar, we would like to be part of that. Yeah, it's a signal in the shift of the conversation. It's not, they're not saying, well, we want to create a CBDC, and they're not saying, this Bitcoin thing is here to stay for sure. But they are, they're indicating interest in, something that could happen. Which is, it's kind of like I said, it's interesting from like a signaling perspective, really.
Actually, Nick, if I can jump in on there, I totally agree with you. And we saw, I think, over the past few days, Visa has said something almost exactly the same. We've seen PayPal give some very heavy hints that this is what they're looking at. And while they're not saying that they are planning on this definitively, they wouldn't be making these kind of announcements if they weren't sure that a CBDC was on the horizon at some stage. And just one last observation on this, which I think is so interesting, it hints at all of the consumer applications that CBDCs will start to allow. Everyone will have digital wallets, and the applications that can be built on top of that are going to be very exciting, as well as the regulatory clarity on some of these relatively decentralized applications that might come through.
Yeah, exactly. Just the sheer fact that they are now openly comfortable saying, this is a thing that we're looking into. It absolutely signals that they think that their lawyers are not going to have any issues, that the regulators are going to be completely cool with them doing this. And yeah, I think we're seeing the conversation really around CBDCs and the digital dollar in particular advance a lot from where it was even a year and a half ago. Just this morning, the Digital Dollar Project, which is a private enterprise looking into a potential U.S. central bank digital currency, announced it's getting ready to kick off, pilot projects. So they're at a stage where they're comfortable saying, hey, we can put financial resources into this, we can put personnel into this, and we can try and figure out what this would look like in reality, what the practical impact might be. This is, of course, separate from the Federal Reserve's own work on central bank digital currency. This is a private partnership between former CFTC Chairman Christian Carlo, former Lab CFTC Director Daniel Gorfien, and Accenture's David Treat. So this isn't a Federal Reserve-backed effort right now, but I imagine that the data that they collect will be invaluable, uh, to the Fed as it's researching this. Um, Outside the U.S., the most advanced project is, of course, still China with its digital yuan project. That seems to be continuing full speed ahead. Although, there's a fair argument to be made about whether or not it is the same as a cryptocurrency, given the what we know so far about how it's structured and how it'll be set up. So that's been happening. I think we can go to the next slide. Looking more at the traditional financial markets and where that's coming from. So last week, someone actually asked Federal Reserve Chairman Jerome Powell how he feels about Dogecoin. I'm really happy that happened. This was, I believe, Yahoo Finance reporter Brian Chung. Um, Powell's response is that Dogecoin, and I think to a broader extent, you can also talk about GameStop this past winter, and that stock price jump. Uh, the Dogecoin, in Powell's view, really represents market frothiness. Represents just how crazy things are right now. Which is it's an interesting symbol, but it also kind of shows just how mainstream crypto's gotten. Where it's not just the big coins, the established coins like Bitcoin and Ether that people are talking about. It is now literally the jokes, the meme coins. The ones that were developed as a satire.
And
What
Nick,
that says.
did you get the feeling that Powell actually knew what Dogecoin was?
It sounded like he was familiar enough with it to have a fairly cogent response, even if he's not like familiar enough for sure that this wasn't just like a what on earth is Dogecoin? Let me say something kind of answer. It's which I think it was pretty interesting. It's I guess it makes sense too, because arguably anyone who's been paying attention to Twitter has probably seen Dogecoin pop up way more often than they are used to. Think on the other end of the Fed, the other conversation we're having is inflation. The Fed is still saying, hey, inflation's a thing. We're looking forward to seeing a little bit more of it. Everyone else is saying, no, inflation's bad. Please don't let this happen. But, I think the Fed Chair Powell's been saying, for months now that he would like to see a little bit of inflation jump up. And he's even comfortable with it going past 2%, which is what their level has been, what their kind of market level has been for quite a long time now.
The feeling that I'm getting, Nick, I don't know if you see something similar, is that we all know that our industry has very confusing vocabulary, and we mix up terms all the time, but we know what we're talking about, right? I think we'll be doing the same thing with inflation here, that we talk about CPI inflation, we conflate that with money supply inflation, and so inflation is a catch-all term here. And we all know that there's definitely money supply inflation. Maybe that's what the crypto investors are most paying attention to. The CPI figure can be quite manipulative, so maybe that's not quite as relevant, although many contracts are based on that. Anyway, it's I don't know if you have the impression that we actually know what we're talking about when we mean inflation.
I will confess that I probably don't, honestly. Um, at some point, it does kind of feel like we're going from a conversation everyone can understand to, one that, depending on which economist you're asking, has a completely different meaning. So I totally agree with you there. It's, probably one of the areas where, as an industry, things could be, improved somewhat.
Yeah, and they also, that wonderful saying where if you're going to predict, predict often. So if we just keep making predictions about inflation, we'll be right.
Love that. That's I have no comment to add to that. That yeah. At some point, if you fire enough cannons, one of them will hit.
Absolutely.
Speaking of US regulators, we actually have a question here from the audience that I think would be good to kind of catch now before we move on to audience questions more specifically later in this presentation. This person asks, do you think the US is in danger of falling behind globally because of its relatively lukewarm approach to Bitcoin and cryptocurrency more generally?
I think it depends on what you mean by falling behind. Arguably, the U.S. Does not have the friendliest, environment towards the crypto space, but that hasn't stopped a, large number of projects from trying to operate within the U.S. or setting up within the U.S. Now, you do also have a lot of projects that are, they're threatening to go offshore. They're saying, we want to move to a different country. Some of them have, in fact, done so, but a lot of the really big ones haven't. And whether that's because it's more difficult to, do it when you're a large company, or whether it's because it's, there's just more of a market for you here in the U.S. Yeah, I think that depends from company to company. The other side is, of course, there are a, sheer ton of companies setting up shop and projects setting up shop in Asia and various countries in Asia. And, you could say, the US might be falling behind, that region because of the companies that are being set up. But so far, it kind of feels like, everyone's kind of trying to do their thing, but it doesn't feel to me yet like any particular country has like a clear, full on, first mover advantage yet.
And speaking of other countries, I know you wanted to also talk about countries, the regulatory environment specifically of some Middle Eastern countries, right?
Yeah, so we've seen a couple headlines in the last couple of weeks out of Turkey and Iran in particular. Turkey is kind of an interesting place right now. So a pair of exchanges collapsed pretty dramatically in the last couple of weeks, and upwards of $2 billion in crypto might be missing for customers. Um, this is, it's pretty bad. And Turkey's reaction has been to suggest creating a central bank managed custodian, basically a centralized crypto custodian to back up all the exchanges, which is kind of, it's an interesting response because it kind of, indicates that uh, Turkey's not trying to ban crypto outright. Mind you, the country did try to ban crypto payments just, I think 3 weeks ago. So crypto payments are, not allowed in Turkey, but they seem to be cool with this idea of people investing and trading crypto, directly, and they want to protect their customers or their, citizens who do that. Of course, the other interesting part about that is, a central bank managed crypto custodian is sort of the opposite, I think, of the original crypto ethos. Make it that what you will, but it is an interesting move from the government of Turkey. And then Iran is actually moving a little bit even further than that. They're actively encouraging its regulated entities to take advantage of crypto and to use Bitcoin that's mined within the country. And Noelle, I think you had you had a really great tweet or thread on Twitter about that the other week.
Thanks. I think the Iran news is totally fascinating because, as you said, Nick, this is a central bank that is supporting private businesses to use crypto for payments. And while this looks like a way around sanctions, and probably is to some extent a way around sanctions, it is also a sign of what could be coming down the pipeline of governments getting behind Bitcoin as a way to increase their own financial independence and reduce the power of the dollar, especially when they see that being weaponized. The weaponization of the dollar is a big discussion. We could have an entire hour webinar just about that, but it's not something new. This is something that China and Russia have been concerned about for some time. And to see that some governments now have a choice is a fascinating development. And this ties into the Turkish headline that you chose, Nick, in that many people have suggested that if some rogue nations, in air quotes, such as Iran, Venezuela, North Korea, start to use crypto, Bitcoin specifically, to get around sanctions, this is going to encourage some of the leading, the larger governments, such as the United States, to ban it. However, we've seen quite a few occasions, quite a few instances over the past few months where governments, smaller governments, have tried to ban crypto and have realized that they just can't. It's just not an easy thing to ban. You can close some of the on-ramps, but activity will continue. Turkey is one example. They announced they were going to be banning crypto. Crypto use continued, if not even accelerated. And now we see them backing away. We saw something similar in Nigeria as well. So the two do tie into this. Could Bitcoin be banned, or could Bitcoin be used to work around certain frictions in international finance?
And speaking of more on how governments are responding and tying it back to kind of our topic on CBDCs, we had a lot of audience questions actually about how does government projects, CBDCs like the digital one, affect stable coins in the broader crypto market? So where's the intersection? What intersection do you guys see playing out between Bitcoin, the use of Bitcoin, Ether, these public crypto assets, with potential government-backed cryptocurrencies like CBDCs, digital yuan, in the future?
Yeah, I mean, I think it really depends on where these projects land. So I'm going to use the digital dollar as an example, just because I know that this is kind of one of the things they're looking at. So, like I said before, there's a private enterprise looking into a central bank digital currency, and there's also the Fed's own research. Now, the Fed's looking at, a number of different blockchain platforms and other technology stacks to support the digital dollar. And so, it may well be that they'll look at a stable coin and say, this is something we can take advantage of. The digital dollar project, the private enterprise, is going even further. They're actually going to be looking at stablecoins as part of their pilot projects, I believe, to use as kind of an example, as a stand-in for the central bank issued version. So the idea is you have these private companies that are already creating these stablecoins. They have the technology in place, they have the infrastructure in place to issue these coins and create wallets and help people use them. So it stands to reason that these companies might be able to help on a much more massive scale roll out a actual digital dollar and see basically apply that to in actual real world usage on the scale of actual central sovereign currency would need.
And again, as we mentioned before, going back to even if you wanted to stop private stablecoin use and replace it with CBDCs, how would you go about doing that? Is it possible to stop something that runs on totally decentralized networks? You could limit its use in certain jurisdictions, but stop it totally? That might be an entirely different proposition. Anyway, I know that, Nick, we're cognizant of your time here, so let's move on to the next section. We could talk about this, for the rest of the day.
Yeah, so regulatory hot topics. I wanted to spend a few minutes just talking about some of the major innovations in the industry that either took off in new ways this year or they're about to take off potentially this year. First and foremost, I warned you, Nick, is NFTs. This chart, everybody who tuned into our webinar last week has probably already seen this chart. It's a little bit outdated, but I did check the latest figures for April. Trading volumes for the month of April, and it hasn't quite plummeted. It's still a lot higher than the volumes from February, but it has dipped to below 200 million in terms of monthly NFT trade volume, but that's still a lot. So I wanted to ask Nick, when we're talking about how these NFTs are created, there's been this concern that you could potentially be buying a NFT that's counterfeit, that's a fake version of the Beeple NFT, let's say, or a fake version of an NFT minted by Lindsay Lohan, etc. It's not that hard to create fake copies of like JPEG digital files, but tell me a little bit about how copyright and intellectual property rights are ruling over NFTs? Like, how do they get applied? Or is it any different from what we already know? Are lawmakers and regulators trying to think of new counterfeiting policies specifically for the NFT space? Give me a little sense of how to combat and how laws and regulations play in with this concern around counterfeit NFTs.
Yeah, it's definitely, I imagine it's probably a growing concern at this point. The idea that you can forge an NFT, and by the way, that was a really excellent article that you wrote, Christine. But the idea that you can forge an NFT has got to be pretty concerning for, some of these companies that are trying to sell NFTs and, maybe profit off of their own intellectual property. So, a lot of companies are pretty, they're concerned about who owns their intellectual property. And usually when they're selling an NFT, what they're really selling you is the right to look at something that they own. So you're not getting the ability to, own the actual media itself. You're getting some kind of, basically permission, some kind of bragging rights, really. So, this idea that now other companies or other entities might be able to do this as well, to take your intellectual property and sell it as if it was their own or as if they owned the original, is probably going to lead to a closer look from, certainly at the very least, lawyers who represent a lot of these major companies. I don't think we're quite at the level where regulators and legislators are looking at this yet. If it gets big enough, that might change, but I think probably it's still a bit too early for that. But certainly you're going to see lawyers trying to figure out whether or not they can stop these platforms from hosting NFTs that they know to be not the originals or not the legitimate ones.
Just because
Right.
it's on a blockchain doesn't mean it's legal, right?
Right. And we've actually seen this. I mean, there was a story from the Los Angeles Times last month where, some artists for DC Comics tried to sell NFTs of their comic book characters, and DC stepped in and said, no, we don't want this to happen. And they sent, I think it was a DMCA takedown notice to platforms like Rarible, and, Rarible blocked access to the NFT. It was still on the blockchain, but the access from the platform was not there.
Which isn't exactly decentralized, but at the same time is necessary. If I could jump in with a question, if you don't mind, Christine, about could NFTs be securities?
My understanding is yes. They can totally be securities. Depends on how you use them, but we're now seeing fractionalized NFTs that represent. You have an NFT that represents part of a bigger NFT, and there's this idea that maybe you can earn interest on that. I've seen concern that that could end up somewhere in securities land. You can also actually deliberately create securities in NFT form if you want them to represent stocks or titles or something along those lines. So yeah, definitely that is something that can and probably will happen.
But would have to be declared through the appropriate channels or regulated by the appropriate regulators. Interesting. And moving on from NFTs, because again, we're at the time, stablecoin volume and activity reached all-time highs in Q1. And we had a big announcement in the first quarter regarding the New York Attorney General's inquiry into the backing of Tether and the use of funds from its sister exchange, Bitfinex. And the market seemed to take this as a sign that Tether's troubles were over. What's your take on that, Nick? Can we assume that Tether is safe now?
I'm not comfortable assuming anything, to be completely honest. It's to borrow a phrase from the crypto industry, don't trust, verify, or trust but verify. So under the terms of the settlement, Tether agreed to pay an $18.5 million fine, and it's going to provide a reserve composition breakdown for 2 years every quarter, starting this month, later this month, actually. So, that'll be the verification part of this. And I think that's when people can say, okay, so now we know what's backing this stablecoin that has, I think it was $50 billion last week. It's also Tether is also providing attestations. These are similar to the attestations provided by Center and Circle, Paxos, Gemini, for their own stablecoins. Basically, they just say, at X date, at X time, this company had, Y amount of, something representing US dollars backing their stablecoin. So it's not the same as an audit. It's not the same as a reserve composition, but I think come May 19th, that's when the first quarterly report's supposed to be in. I think that's when we'll have a better idea of what's backing Tether.
And speaking of pretty famous,
we've also seen Coinbase come in, decide to start allowing trading in Tether once they get the technological glitches sorted out. Is that a sort of validation in your opinion?
It could be. It could be Coinbase saying, we're comfortable with this. I think I have to check. Last time I saw it, Tether trading hadn't actually begun. They had accepted deposits, but they hadn't begun trading at the time. Coinbase cited API issues. I'm not sure if that's been resolved yet, but yeah, it definitely could be a validation of some sort.
Christine, you had a question.
Yeah, speaking of very famous legal cases that kind of developed significantly over the first quarter, we've got an audience question here about your feelings on the XRP Ripple case with the SEC. Developments there, any comments on how that's progressed?
Yeah, so they're in kind of this procedural back and forth right now over, what documents the SEC can provide and what documents the SEC can acquire and what can Ripple share. So there was a hearing on that on Friday. Basically, they're still kind of working on the scope of discovery. I think it's too early to have any sense of, where the actual substantive arguments will go. That'll come after all the discovery's been sorted out and when they start filing the, actual arguments saying, we believe this because this. It is, it does feel like it's still kind of early stages. This only kicked off 4 months ago and a lot's happened, but it's still, court cases are never really fast.
That's very true indeed. Sometimes it takes years to settle.
We have, since we only have a couple of minutes left, very quick question, Nick, on the ETFs. I know we've had rumors swirling around that an ETF, the approval of a Bitcoin ETF is imminent. This is not the first time we've heard these kind of rumors. Those of us like yourself who've been covering this for a while, this sounds very familiar. Is this time different?
It might be. Consensus seems to be from a number of folks I've spoken to and a number of folks I've seen that there will be approvals this year. It'll probably be later in the year. And it might be multiple approvals at once just to avoid giving any one company the advantage over the others. So, the process is well underway. We've only got a couple ETFs being reviewed right now. So my guess is if and when, more enter this, kind of SEC process, that's when we'll start getting a better sense. Maybe this fall, winter. Again, this isn't investment advice. This is just speculation from me, but it kind of looks like this fall is the time to be watching out for.
That's interesting. And looking north of the border, Canada, obviously they've had Bitcoin ETFs for a while now, doing very well. They also have Ether ETFs, and over in Europe, where I am, there's such a variety of exchange traded products on different types of crypto assets now. Do you think we might see an Ether ETF in the US within the next 5 years?
It seems likely. No one I've heard of is planning to file one right now, but if we're looking at Canada, and Canada's, I think, the best example here because, one of the assumptions is that Canada kind of does stuff that the US will do in the ETF space just sooner. So if Canada's kind of like the forward-looking advanced look here, then it seems likely that we will have an Ether ETF, but no idea when and no idea who.
I think 5 years to be facetious because things move really slowly at the SEC, but you're right. It may once one falls, the other approvals might come through thick and fast once the main hurdle has overcome.
Yeah, and then the other thing to look there is also, the Bitcoin futures market in the U.S. has been chugging along for I think almost 3.5 years now. The Ether futures market is almost a year old, so I think as that market continues to get inflows and mature, I think that's when we'll really start seeing discussion around an Ether ETF here.
That is really interesting. I think we're probably out of time now, Christine, are we?
I think so.
Anyway, Nick, thank you so much for being with us today. It was so much fun talking to you. I'm sorry that we don't have time to talk about more of the audience questions that have come in. Thank you so much for sending them in. We will do our best to get to some of them on our Twitter handle, which is @CoinDeskData. So do please follow us there if you don't already. And you can find our Twitter handles, Christine's, Nick's, and my own, in the speaker profiles on the webinar in email that you got sent. And thank you very much for joining us. Thank you, Nick. Thank you, Christine. And this was the last of the series of the webinars for the quarterly. Christine, what do we have coming up next?
We've got the consensus event for everyone who is interested in hearing more about the topic of regulation, more on the topic of markets, technology, basically like everything in the crypto industry. It is the event of the year. You can find out more details about consensus by going to coindesk.com.
And we hope to see you all there. Thanks very much for tuning in.
Thank you.
Thank you.